Hey guys, welcome to another video brought to you by Total Control Traders. So I've decided to make this video while the memory is still relatively fresh. What is it like to be trading while working a 9 to 5 job? Since most of us, whether if it's have been in that boat or still is in that boat, I find that this is likely a very common question, and hopefully it'll answer some of your questions in regards to whether if other people are experiencing the same things. As most of you already know, I changed from my 9 to 5 financial planner position to a full-time day trader last February 18, 2020, 2 days before the market crash. Now, having worked a 9 to 5 job for 8 years, I have had my share of trading while working. First thing you need to come to understanding is that you are unlikely to be able to place trades throughout the whole time that the market is open, which depending on your time zone is, the general is 9:30 to 4 o'clock. My personal time zone is 7:30 to 2 o'clock. So regardless, it is highly unlikely that you will be able to place trades whenever you feel like it. Now, with that in mind, you will need to develop a proper investment style geared towards the longer investment time frames. The one I had personally gone with while I was working a 9 to 5 job, was a swing trader style based on dailies and weekly charts, majority focusing on the daily charts. And of course, it would definitely help if you wake up an hour or two before your normal schedule, whether that is to do some research, practice your technical analysis, scour the charts for the setups you like, or just to learn something new. And there is no such thing as I don't have enough time. I mean, of course, if you're a single parent working 3 jobs, that is a different story. But for the majority of us, we are more than capable of making time in order to further ourselves, whether that's on the trading front, progression through work, or even just yourself as a person. And my big thing has always been to consistently learn something new, consistently progress myself. Without that part in any job, I find it just becomes too boring if you're just on a cruise control mode. All right, let's get into the pros and the cons of what it's like when trading while working 9 to 5. First one, if you're trading 9 to 5, you are likely to be looking at the bigger picture versus zoomed in on the smaller time frames. The con to that, however, it is easier to miss red flags that are coming up on the shorter time frames, which in turn what the result of that would look like is you're likely to give back a little bit more than those who are trading actively or day traders. Now, having a big picture in mind while trading is a good thing because you are likely to let your trades mature. You're more likely to ride the whole way without getting fake outs. You are in the chart that is in an uptrend or in a trend of your favor. You're a whole lot more likely to keep on riding that chart, placing your stop at the higher lows versus placing your stop at the higher low of a shorter time frame, which then will allow you further progression in that specific trade, thus letting it mature. However, on the flip side of it, you're also a little bit more likely to become bag holders. And this, I'm speaking through experience. I've had a couple bags that I held since the marijuana trade, the marijuana run, the marijuana hype, whatever you want to call it, 2017, 2018. Those times were when I was actively trading while I was at work, trading while I was traveling, at the airport, trading while I was on vacation in Mexico, all the time. I woke up early, grab all you can eat breakfast, sit at the table, whip out the iPad, whip out a desktop or not this laptop, and have them side by side and just trade while I was in Mexico having that morning breakfast. But without the ability of being able to trade all the time, when that trend reverses, you will more likely to begin holding onto the position based on emotions. Then when the chart continues to go in reverse of your favor, you just start holding and holding and hoping that the chart will reverse. And by that point, a couple of things happen. Your capital is tied up. You're unable to make other trades. And this is partly a pro and a con while working 9 to 5. Although that capital is tied up, you are still having stable income coming in that will allow you to buy other things. But regardless, that capital is tied up. And you are losing money, you're unwilling to take that loss. Then what ultimately happens is by the time that the chart comes back, like marijuana is right now lately, you are most likely going to exit on a break even. You'll just be happy, after a year and a half, 2 years of holding, that you're able to get out break even without a loss. Trading while working 9 to 5, you want to be able to say, hey, I didn't take that loss kind of thing, but you also didn't make a gain. So that's the main difference one of the main differences between trading while working versus trading actively. If you're active, you will be looking at the chart, determining whether there's further upside. And thankfully, I am an active trader now. The bags I held in marijuana, I was able to get out, not just break even, but with a very decent profit. Although, now that I've learned my lesson, going forward, capital is everything. With that free cash, I would have been able to enter at a much lower price, write this all the way up with a much higher profit versus holding a bag, then determining the exit after a year, 2 years down the road. Now the third is a less fake out, and we already covered that. Because you're looking at longer time frames, you're looking at daily, weeklies versus the shorter time frames, it is less likely that you're going to get faked out by a breakout fake out or a breakdown fake out. Less likely, depending on how you put your stops. And then our channel, we focus on trading using trend lines, a combination of everything. Trend lines, resistance, zones, instead of just purity, resistance, and support. Because through the experience from before, if you are only using support and resistance, there is a very high chance that you get faked out very frequently. Now the con on this is slower reaction. Even though it's less likely you get faked out, it is guaranteed that you're going to be much slower at reacting to a chart, to a news, to a big move in a chart versus someone who's active day trading, staring at the charts, looking at it all the time. Meaning your entries, your exits generally won't be as ideal as someone who's active. Of course, there's those instances where you will nail the top, nail the bottom. The only time the only time that actually has happened to me, and it's like a once in a lifetime thing, it was actually on Jameson Wells, and that was when I was working 9 to 5. Because you're unable to look at the charts all the time, what your trading is most likely going to be is you put a limit buy or a limit sell kind of trades after you've determined where the support and resistance are. And that one time on Jameson Wow, I nailed the top to the penny. Once in a lifetime. Really doubt that's going to ever happen again, especially now that I'm trading full-time. If you're trading while working 9 to 5, your limit orders, they are either going to be very ideal or they're just not going to hit. So slower reaction sometimes work in your favor, most times likely not. And the next one is up to date on the news. Now this again can be a pro or a con, more likely to be a con. And the reason why I say that is you will be way too tuned in to the news, to the updates of the news, and if you're looking at your positions actively while you're tuned in, every single little thing will scare you. You know, one thing I mentioned before, ever since starting to trade full-time, I have not read the news. Maybe once maximum. Over the last year and some, read the news once. And that was because I was kind of bored and wanted to see what the update of the pandemic looks like. But if you're reading too much into the news, they're all noise. If you're reading too much into the news and trading off of news, the chances of a winning trade are slim. Because generally with the news, there is a reaction to the news and then there's a reaction to that. So the first reaction to the news is generally fake. Okay. Most recent one I can think of is probably Amazon. You know, the earnings came out, it went up. Bezos news came out, it went down, and then it just kept going down. That's the most recent one. All right, moving on. Next one is stability of income. So we briefly covered this on the maturing trades and the bag holding. With the stability of income, it allows you to buy other things without having to take losses or taking profits, which is good. And you don't really have to worry about your trades as much, which goes back to letting your trades mature, because you're not relying on these trade profits as a living expense. So that is definitely a pro. And there's no con side to this. Inability to trade anytime, that is a given. And we talked about it, where versus someone who's trading full-time, whether if you're tied up at work, you have a report to send in, you have an account to open, you have something. There's always something going on at work. You know, there's busy times, there's slow times. Your busy times doing work may not line up with the slow time at trading or the market. Ideally, you want your slow time to line up with the busy time in the market, because then you can make a profit trading. But that's not always the case. So, big con there. And the last pro, but not the least, ability to average down. This is partially due to your stability of income. As you are holding a bag, which ideally you will not be going into if you're watching this channel, never hold a bag. If you're holding a bag, averaging down is never a good idea either, unless it is a planned second, third entry. The ability to average down is ultimately still a pro, because without that ability, your average of that position is going to remain high and it's going to take a lot longer to come back. However, it is never recommended to average down without a plan. Just because the stock is trading lower from where you bought does not mean that it's a better price. The stock could continue to drop further and further and further, swallowing up your capital the more you put in. Always going to trade with a game plan. Now there's three more on the con side. And first one, lack of time. due to your work, you are likely to have much less time to be able to look at the charts. Same with inability to trade at any time. The lack of time will not only refrain you from trading, it will also refrain you from the basics of trading, which is doing your due diligence. And thus, you will need to make time for it. As long as you have the passion, and I really doubt that someone doesn't have the passion to make money. If you do, you will make time for it. If you are interested in trading, you will make time for it. Just as if you were interested in sports, basketball, snowboarding kind of things, you will find the time for it. And the last two are a little bit rare, but they are part of the con of working 9 to 5. In my previous position as a financial planner, I was licensed under a specific entity, and thus making my trading accounts pro accounts, meaning that all my trades are monitored, and every now and then you'll get a question on why did you make this trade? Is it because you got inside information kind of things? They just wanted to make sure that because you are in the industry, you're not trading based off of insider information that you get, which becomes a little bit more time consuming. It's only ever happened to me once over the 3 years. Just so happened to place a trade on ACB the day before they announced their dilution. And I don't even know why they reached out to me, because that was a losing trade, funny enough. But regardless, it is one of the cons. Doesn't happen as often, not that impactful either. Not as impactful as this next one. The next one is restrictions due to work. There are some people, depending on their positions and depending on their companies, depending on the positions in their company, they would have restrictions on what they can or cannot buy when it comes to investments, whether it's ETFs, mutual funds, anything that's consisting of individual stocks. Say a ETF consists of a Suncor, and maybe their position refrains them from trading Suncor. There's absolutely no trades on Suncor. You cannot even hold mutual funds or ETFs that contain Suncor. And I'm just using Suncor as an example. Okay, so that is part of a con for trading while working 9 to 5. Now, I wanted to circle back onto the lack of time. Remember how I mentioned that unless you're single parent, working 3 to 4 jobs kind of thing, that's a different story. But for the majority of us, we can make time for it. And on the right hand side, you'll see a schedule. That is what my schedule looked like while I was working 9 to 5 over roughly about 2 years period, 2 to 3. And my 9 to 5 was more so a 9 to 5:30, because the banks don't pay for your lunch, so you're there for 8.5 hours. I mean, you can opt for the half-hour lunch, but when you're working 8-hour days or 8.5 hour days, most people would want that 1 hour. So my hours were 9 to 5:30. And my schedule, what it looked like was every day at 5, latest 5. I would be getting up, getting ready between 5 to 5:30. Doesn't take me too long I don't need to put makeup on or anything, so half an hour, get ready, get all my my dress shirt on, dress pants, hair done, and then just a suit jacket out front, ready for when I'm going out. Then from 5:30 to 7:30, I'd be looking at the charts, or learning something new, or just drawing patterns, seeing if I can see patterns or trend lines or resistances that are noticeable, looking for setups that pop out at me. Then from 7:30 to 8:30, that first hour of trading is always amazing because the volume is so high. But unless you have a good idea of where the chart is likely to go, wouldn't really recommend trading that first hour. Movement is fairly volatile on that first hour, and directions are generally unclear. Most cases, it'll be choppy direction, especially for that first 15 minutes, unless you have found the golden setup. So anyway, 7:30 to 8:30 you'll be trading. Then from 8:30 to 9 is traveling to work. 9 to 5:30 is work. Then another half hour traveling back. 6 to 8:30, roughly 6 to 8 or 8:30, depending on how much I want to put in for due diligence wise. But 6 to 8:30, we'll call it dinner, shower, TV, family time. TV is my relaxing time, whether that's reading or whichever for you. But you always want to try to unwind, especially after a long day of, in the morning, looking at charts, going to work for 8.5 hours, then coming back, hour traveling between. You want to find something that works for you to relax. And for me, it was TV time, just simply staring at something. I mean, staring at a screen is never good, but it helped me. Anyway, so from 8:30 to 10, then I'll be doing my further due diligence, getting ready, looking at charts, learning something new, and jot down the charts that I am noting that it's worth looking at for the next morning to look at during the pre-market to see if they are trending in the direction that I had anticipated. Then 10 to 5, sleep, and rinse and repeat. But yeah, that was my schedule when I was working 9 to 5. Made time, waking up extra early, making sure to learn the things I want to learn. So it's just an example. It doesn't mean that you have to go by the exact same thing, but it's just something that I wanted to bring up where, just because you're working 9 to 5 doesn't mean you're busy. Doesn't mean that you're too busy to look into something that will help you progress in your finance front, or even just furthering yourself in learning other things, But yeah, this is my little story of trading while working 9 to 5, how I personally made it work, and finally before deciding to transition into full-time day trading. Don't get me wrong, there is a lot of work to be put in, and I had done that for 2 to 3 years before becoming full-time day trading, but the work pays off. Another 9 months of sideways action while trading full-time, but the learning while trading full-time is just incomparable to when you're trading 9 to 5. But then again, without the trading while working 9 to 5, it's you're not gonna be able to have that financial stability, that backup of savings that's required for both trading and living expenses. So I think overall, I'm very thankful that everything really worked out. But something to keep in mind if you are looking to prepare yourself to come in to trade full-time. Get some experience in while you're working 9 to 5. It is not something that you can just jump in, unless maybe you're a genius, just jump in, learn everything all at once. But if not, it'll take time. So that's a little story. Let's do a little quick recap. When working 9 to 5, when you're trading working 9 to 5, make sure to focus on the bigger picture, daily, weekly. One big recommendation I would say to avoid beg holding: set a stop and stick to it. Whether that's giving back, 5% of your gain, you are still in the red. You are still in the green. Or even if you're in the red, make sure to stick to your stops. I never really came to a full understanding of that until becoming a full-time day trader. You need to stick to your stops, your stop outs. You say you bought a stock at $100. You're looking at 120 as a target. It goes the other way, $90. Your stop of 10%, be willing to take that stop, because it could very well go down to $50 and take another 2 years before coming back to 100. So stick to your stops, looking at the big pictures. Let your trade matures. That should be relatively easy. And don't read too much into the news. Make sure to always have savings on each paycheck in case you want to buy another stock, another opportunity, or even just saving to become a full-time day trader. Anyways, that is it for this video. Thank you guys for watching. Hope you enjoy the content. Make sure to check us out at totalcontroltraders.com. If you're looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button to get updates on our daily videos. Thank you for watching. Hope you guys stay safe and be in control. I will see you in the next video.